Going to do the roll call?
Anil?
Yeah, I'm trying to look for the list. Okay, so I got the list.
Okay.
Anika Lescott,
Good morning, I'm here.
Daniel Green,
No.
he's not here yet. Darshan Patel from Deloitte.
Jill, is Darshan logging on?
He was joining. He may be having some technical difficulties. I'll send him a message, but I think we can proceed.
Okay. Keep going, Anil.
Dixer Abreu, Frankie Chan from New York City Actuary.
Here. Here.
Jeffrey Lesnoy,
Yes, here.
Jill, of course, is here.
I'm here, yes.
Mr. Kaplan.
Yes.
Yes.
Yeah. Mike Hudick.
Yes.
Mr. Koo.
on.
Mr. Koo is here, I believe, right?
Yeah, I'm here. I
Yeah.
just got the audio now.
Oh, good. Okay.
It's been off.
Yeah. Okay. Sarah Koboko from Law.
I'm here. Good morning.
Good morning. Teresa Puccio.
Side door.
Yes, she's on.
Okay. Thomas O'Hara from New York
Yes, I'm
City
here.
Actuary.
Sorry, I forgot to unmute. Thank you, Tricia.
You're welcome.
Okay. Tricia is on. Mr. Gonzalez is on.
Yes.
Vilma.
I'm sorry, I was on mute. Yes.
Yeah. Okay. So that's all. That's all the people I have.
There is one user that called in, don't have a person's name.
Okay. Whoever's calling in, please just put that person on mute.
Will do.
Darshan is on. I see Darshan now.
Yeah. Darshan just joined in. Yeah.
Okay. So is everybody ready?
Yes.
Okay. So, Louise, you can start recording.
We'll begin recording now. 1 second. Recording in progress.
Good morning, everyone. Welcome to NYCHA's Authority, New York City Housing Authority, September 17, 2020 Audit Finance Committee meeting. Today, we have a very full agenda, so we'll try to move through it to make sure that we make best use of our time. The first item on the agenda is the approval of the Audit Committee minutes from July 21st, 2020.
I motion.
So moved.
Mr. Gonzalez second, and first, who's seconding it?
Second.
Okay.
Mr. Koo and Mr. Katz. So the next item on the agenda is Deloitte's Audit Committee letter from 2019. From that respect, turning it over to Deloitte. Jill and Darshan Purcell.
You have an echo.
Can everyone please mute their cameras and things of that sort if they're not speaking? So Deloitte, please feel free to proceed.
Thank you, Tricia. So good morning, everyone. I am going to take you through the Deloitte SAS 114 letter, or our Charged with Governance letter. To the members of the committee, if you received the package in the mail and you're looking at it hard copy in front of you, it's the letter with Deloitte on the top. And I'm going to take you through that letter. And for scrolling on the screen, I think we can go to the next page. And another page. I think one or two more. Here we go. So Deloitte is currently in the process of completing the audits of the financial statements of the New York City Housing Authority, NYCHA Public Housing Preservation 1 LLC, and NYCHA Public Housing Preservation 2 LLC. As of and for the year ended December 31st, 2019, in accordance with auditing standards generally accepted in the United States of America, government auditing standards, and the requirements of U.S. Office of Management and Budget. And we expect to issue our report dated today, September 17th, 2020, pending the approval by the committee members. Next page. On page 11 on your screen, or page 2 on the manual document, lists out our responsibilities as your auditor under the auditing standards and OMB uniform grant guidance. These responsibilities were described in the agreement between the Housing Authority and Deloitte dated February 28, 2020. Moving on to the next page. The NYCHA's significant accounting policies are set forth in their Note 1 to the finance statement. We are not aware of any significant changes in previously adopted accounting policies or their application during
Can
the
you
year
hear me?
ended.
Kaplan, I just want to know, is the last sentence on page 2 something you've said before, or is this something new?
We've said that every year.
Okay.
So we are not aware of any significant changes in previously adopted accounting policies and their application during the year ended December 31, 2019. We have evaluated the significant qualitative aspects of the authority's accounting practices, including accounting policies, accounting estimates, and financial statement disclosures, and concluded that those policies are appropriate, adequately disclosed, and consistently applied by management. Accounting estimates are an integral part of these financial statements prepared by management and are based on management's current judgments. Those judgments are ordinarily based on knowledge and experience about past and current events and assumptions about future events. We will go over some of these, or I'll go over some of these in more detail in a few moments. There were no material uncorrected misstatements or disclosure items identified during our audit. When we get to the management rep letter, I will talk about one immaterial uncorrected misstatement.
It's me again. I'm sorry.
Sure.
There's
You're on
no
mute,
material.
Mr. Kaplan.
Can you hear me? Oh,
Yes.
nuts.
Yes.
The last sentence on the page says that disclosure items PASSED identified. What does PASSED mean in that sense?
What page are you on?
Page 3, last full line.
So, Mr. Kaplan, the footnotes are part of the financial statements, and that's where management makes disclosures related to amounts included in the actual financial statements themselves, on the statement of net position and the statement of changes in net position. The footnotes are audited by us as your independent auditors. There could be an instance where a disclosure is required under the accounting standards, which was not made by management in the footnotes. And in those cases, if a disclosure was not included in your footnotes and it was material, we would include it here. We did not know any instances where management did not make the appropriate disclosures in their footnotes in accordance with the standards.
So,
What is disclosures items past identified?
It just means that all disclosures are included in the financial statements. We didn't have any instances or know any instances where there were any missing disclosures in the financial statements. We use the term no disclosure items past, meaning we didn't pass on proposing an adjustment on any disclosure items.
Okay, thank you.
Okay, Jill, for me, the last paragraph in the first, I'm sorry, the last sentence in the first paragraph at the top, it says our consideration of internal control, or could you break that statement down for me so that I can understand if you're auditing, why aren't we reporting the significant deficiencies or material weaknesses?
Well, when we develop our audit procedures, we look at the internal controls of the authority. We test to make certain that those internal controls are designed and implemented as management intended. And we have looked at those controls throughout the course of our audit. We don't issue an opinion on internal controls. We're not required to under the standards, but we do look at the internal controls. And I am pleased to report there are no significant deficiencies or material weaknesses that I need to report to this committee.
Okay, all right.
Okay, next page. So there were no material corrected misstatements that were brought to the attention of management as a result of our audit procedures. I'm happy to report we did not have any disagreements with management related to matters that are material to the 2019 financial statements. We are not aware of any consultations that management may have had with other accountants about auditing and accounting matters during 2019, except the consultation with the accounting firm BDO regarding treatment for real estate transactions. In our judgment, we received the full cooperation of authority's management and staff and had unrestricted access to the authority's senior management performance of our audit.
I have a question on, is it normally just the senior management that's involved in this, or the people on the ground level that are actually doing the work?
We had unrestricted access to all members of management at all levels.
Oh, okay. Because you put senior, and that kind of threw me off. I'm saying, okay, well, it's just senior staff. What about the people that are at the ground level that are actually doing the work?
That's a good point, Mr. Gonzalez. I can make that note for future letters.
Okay, thank you.
We have made specific inquiries of the authority's management in the form of a management representation letter, which is an integral part of our audit evidence received as part of our annual audits. I'll go over that management representation letter in a moment, but it is attached here as Appendix B, and I'm required to provide a copy of that letter to you, the members of the audit committee. On page 5, or the next page of the document, yes, 14 here, list out emphasis of matter paragraphs. These are paragraphs that either in our professional judgment as your independent auditors or as required by the Gasby standards, we have to note in our opinion to each of the financial statements. 2 of the matters just relate to the 2 LLC corporations. And really they let the reader know that these are component units of NYCHA, the larger authority, and that these 2 smaller component units receive significant subsidies and have material transactions with NYCHA. The other matter paragraphs, as listed at the bottom of this page and on the next page, relate to required supplementary information and other information that's included within the financial statements of NYCHA, again, as required by Gasby. For instance, your pension and your OPEB schedules are required under the standards. And again, our auditor's report just has to call out the fact that this information is included within the financial statement. Moving on to the next page, and then one more page.
6.
7 of the document in front of you.
Oh, I wanted to ask a question of the supplementary and other information.
Sure.
On the last line of the introductory section and statistical section. Says listed in the foregoing table of contents are presented for purpose of additional analysis and are not a required part of the basic financial statement. Then you go on to say the introductory section and statistical section has not been subjected to the audit procedures applied in the audit of the basic financial statement, and accordingly, we do not express an opinion or provide. So what were they subjected to?
Our responsibility, well, let me go back. Your CAFR, NYCHA's CAFR, is comprised of a number of sections. One is the introductory section, then you have the financial section, and then you have the statistical section. We as your independent auditors opine on the financial section, which includes the amounts and disclosures related to the balance sheet and P&L, so to speak. The introductory section and the statistical section, they're required under the reporting for a CAFR. The Governmental Finance Officers Association that really dictates the rule set for producing a CAFR requires that there's an introductory and a statistical section. As your independent auditors, we read those sections to understand that and to make certain that there are no contradictions to the financial statements. But our procedures are limited to reading them and making certain that there's no contradicting, nothing in those sections contradict the financial statements themselves.
Okay. All right.
We don't issue an opinion on those sections.
Okay. All right.
Control related matters. As I mentioned, we don't have any significant deficiencies or material weaknesses. But we will plan to issue a separate report to this committee, also dated September 17th, 2020, containing any other internal control matters identified during our audit, such as low-level deficiencies. In addition, we will also plan to issue our single audit reports in December later this year, and I believe there'll be another meeting subsequent to this to discuss the results of the single audit. So I'll hold that discussion for then. On the next page, this is where it begins our discussion around significant accounting estimates. The first significant accounting estimate, which we spend a lot of time as your auditors on, and relates to pension benefits and the pension obligations recorded in the financial statements. For the year ended December 31, 2019, the pension liability was approximately $822 million, which is a rather large number. And the associated expense for the year ended December 31, 2019 was approximately $118 million. We also recorded deferred outflows related to pensions of $150 million and deferred inflows of approximately $235 million. In the bottom chart, it lists out some of the significant judgments and factors used in determining the overall net pension liability, which includes the discount rate, the salary increase assumption, expected return on assets, inflation, and the COLA. As part of our audit work and testing the pension liability.
I have a question. You have the expected return from 5% to 5.2%. Are you taking the position? There are two different expected rates of return set forth there. Which one are you using?
I'm just pulling up. And I know members of the actuary, City of New York actuary are on the phone and they have a quick answer on it.
I can understand a 5% or a 5.2, but I don't understand the range this way.
I'm just pulling the footnote in the financial statement. I can get back to you on that. As far as that may be a typo on our part as well in putting together the schedule.
Okay, then while we're at it, how does this statistical information about the pension plan and OPEB compare to what the city will have? Are they congruent?
I'm sorry, Mark, I didn't hear the last part of that.
I'm asking whether the disclosure for NYCHA on OPEB and the budget and the pension is going to be the same, except for the numbers, on the city audit.
Right. NYCHA is part of the city's NYCHA's pension plan. And so the information that's included in these financial statements is using a measurement date of June 30th, 2019. So it would, the information and disclosures related to NYCHA's liability in this set of financial statements, you would have seen similar disclosures in the City of New York's CAFR last year.
That's what I was asking. Thank you.
You're welcome. You're welcome. And as part of our audit work related to the pension liability, Deloitte involves our own set of actuarial specialists as well to understand the methods and assumption used by the city's Office of the Actuary in developing the calculation. We also test the underlying census data, the active census data, for completeness and accuracy as part of our work, and we use specialists to do that as well. The next significant estimate on the following page relates to the OPEB liability. The total OPEB liability as of December 31, 2019 was approximately $2.8 billion, with the associated OPEB expense of approximately $128 million, and associated deferred outflows of $396 million and deferred inflows of $386 million. Once again, in the table towards the bottom of the page are the significant judgments and factors used in calculating the OPEB liability, including the discount rate, inflation rate, and certain healthcare cost trend rates. It should be noted that the OPEB discount rate did decrease from last year. I believe it was approximately 3.6% last year, and it's 3.2% this year. And it's mainly due to the fact that this is directly related to how the 20-year muni bond rate performs. And part of the reason your overall liability has increased year over year. Similar to the way that we test the pension liability, Deloitte involves actuarial specialists and other data analytics specialists to also test the OPEB liability as part of our work. We involve a Deloitte actuary, once again, to review methods and assumptions used in calculating liability. And we test the census data, active, inactive, for completeness and accuracy. The last estimate I wanted to go over on the following page related to your estimated liability for injuries to claims related to self-insurance, workers' compensation, and general and casualty claims. This is another area where Deloitte brings in actuarial specialists to understand the methods and assumption used by your external third-party firm. We test the underlying claims data for completeness and accuracy, comparing data from one year to the next to understand any changes in the data.
Jill, I'm sorry. I was writing down some notes. I don't know if you mentioned this, but the discount rate, what do you attribute it for going up from last year?
On the OPEB, the discount rate has went down approximately 3.6 last year to 3.2% this year.
Right.
And that's because it's tied to the 20-year muni bond index.
Okay. I was writing when you said that.
Yeah.
Can you explain to me lost triangle is? Whoops.
It's a triangle that your actuarial specialists build out based on claims data over the years. So number of claims, dollar value of claims, and there's a number of ways you can build out a loss triangle. Probably the one that most people are familiar with is usually by years, so by accident year. And we have firm specialists that essentially take the data used to build your loss triangles, and we rebuild them as part of our audit work to make certain that they're complete and accurate.
I confess to you that I'd be hard to explain that to anybody who asked me what it meant.
Did I do an okay job, Mark?
No, frankly.
No. Maybe we'll save that for another conversation, and I can show you what that is. Okay. The next page includes draft management representation letters. You're going to see that this includes track changes. In prior years, the audit committee members has asked that we track changes from one year to the next. So we have done that here to show you what exactly has changed from prior year to this year in the management representation letter. High level, what's changed? Last year, you received 3 management representation letters, one for NYCHA and one for each of the LLCs. This year, we decided to combine them all into one management representation letter. You will find that the new Gasby section of this letter has changed to reflect what's currently going on with standards. Additional reps were included related to COVID-19 and going concern assumptions. That's something that we as a firm have all of our clients include in their most recent management representation letter. You'll also see a representation related to pollution remediation liability. The amount of the pollution remediation liability significantly increased this year over last year due to extraordinary efforts on the part of management to come up with a precise estimate of the liability. Now that you're 2 years into the federal monitor oversight and the HUD agreement. And we tested that liability as part of our work this year. We spent quite a bit of time testing the liability related to remediation efforts, abatement efforts. But as part of our test work, we tested certain housing units that were excluded from the calculation of the liability. And the reason those housing units were excluded from the calculation was because they were deemed exempt. They had either been tested previously and shown to have negative lead paint results, or there had already been abatement or remediation work performed in those units. Therefore, they were in the exemption group. As part of our test work, we did make selections from the exempt group of units to ensure that they were in fact exempt. We made 26 selections, and there were 3 exemptions in which audit support could not be provided to Deloitte. It doesn't mean that the audit support doesn't exist. It just means that it wasn't provided to us, and my understanding is that's because the actual supporting records for those 3 selections were with authorities in another state as part of their review. But as a result, because there were 3 selections in which audit evidence could not be provided to us, we did have to consider those errors in the population, and we did extrapolate those over the population and what impact it could have on the overall pollution and remediation liability. And it was determined that it was approximately $45 million, which is not considered material to the overall financial statements of the authority. You will see that rep language on page 9 of the rep letter, or rep number 47. So those are the major changes to the representation letter year over year. In addition, yesterday you were
Can I ask a couple of questions, please? Can you hear me?
Yes.
If you look at paragraph 1A, it says component units as well as joint ventures with an equity interest. You mean an equity interest which we have in them, or what?
Yes, that's correct.
Well, it doesn't quite say that. And then, a more significant question. Oh, I guess that one's okay. Bear with me. Flip the pages because I haven't marked. Okay. There is something here on item 23. Should we see that corrective action plan that's described here? Or has the board seen it?
Mark, as part of the single audit, the corrective action plan would be part of that presentation, a single audit presentation, which will be held later this fall.
Well, I'm more interested in management's response to the fact that there was a correction action plan here mentioned, and wonder what effort management has taken to correct that.
Audit, we're required to include all reps in this letter, but the overall results of the single audit are still in progress and will be communicated to you at a later meeting.
That too, but I'm looking at something that says that there was a corrective action plan. And I'm asking management whether or not that plan has been implemented, and if so, are you satisfied?
Hi, this is Anika. Can you please, Mr. Kaplan, point me to the section that you're referring to?
Paragraph 23.
Page 5. Oh, page 5.
Thank you, I found it. Thank you. Jeff, can you speak to to this section here?
I don't have the details in front of me. I can say that we have addressed each of these items. These are mainly operational and compliance-related issues. Some are relating to the accounts payable process, not necessarily directly related to financial reporting, but we're not in position to discuss this, I mean, at this point in time.
Next question. This is just language. If you have us saying the tax exempt bonds issued, I would have said you should have by us, because this representation in effect covers the universe. I wouldn't. And then, more important to all this though, and the related party transactions. There are always problems in the world in which people complain about related parties. There's some news articles about some of that right now. Are there any, and if so, how are they monitored?
You're referring to rep number 35, Mr. President? You know, NYCHA. No one echo. So related parties include component units. So from NYCHA's perspective, their related parties would include their LLC 1, LLC 2, along with the city of New York, for example. And so there are transactions that occur between those parties. We, as the auditors, do focus on related party transactions. We look at them, we make certain that the transaction makes sense, that there's a purpose behind the transaction, and that as part of your overall authority's financial statements, that any elimination entries are made. For instance, if there's a revenue type transaction between the authority and one of the LLCs, we make certain that it's not recorded twice and that the appropriate eliminations are made to your financial statements.
Well, I'm really interested too, as a control matter, whether the institution has some process, has some procedures involved or rules about related party transactions, so that somebody who's a senior officer can't buy stock in a company we do business with, those sorts of things.
I'm sorry, there's significant echo. I'm having a really hard time hearing you. Would you mind repeating that?
Hello? Oh,
That's
I'm
better,
mute.
thank you.
What processes and procedures do we have in place to deal with the concept of related party transactions, whether it's senior officers, junior officers? We don't have stockholders, but we have the city. What rule systems do we have in place, and how are they enforced?
So as Jill mentioned, our related party transactions mainly have to do with the Housing Preservation Corp. LLC, 1 LLC and 2 LLC, which are developments that in which NYCHA has a stake, and for that reason they're included in the financial statements. So they're not, in this case, publicly traded companies or anything for which we could buy a stock, for example, to your direct question.
Yeah, but what kind of rule system? This triggers off a different sort of inquiry. We have contracts all over the place with people, with all sorts of services and goods. Do we have any mechanism for monitoring the relationship with those companies and people who work for us?
So I think your question probably has some more to do, if I'm understanding it properly, with sort of the rules related to procurement. and how we procure goods and services. Is that the right way to understand what you're asking?
That's one subset. Any economic arrangement we have a constraint on the ability of people to be involved with it economically, or at least force disclosure.
Right. So I know that there is a disclosure process that senior staff do have to do on an annual basis. And I believe that's tracked by either our HR or our compliance functions. In addition, when we procure any goods and services, those, depending on the level of goods and services, have to go through the board for a resolution. So there aren't necessarily, a senior officer who can make a determination on their own without following strict procurement rules. For which we also track our compliance.
Thank you. I'm triggered by the fact that out in California, the guy who was the head money manager is now being looked at for investing in one of their investees.
No, and that's completely understandable. I'm happy to find out if there's any, background information that I can get for you, for example, on our disclosure process. I don't know if you've ever seen the package. It's pretty lengthy. And I'm sure I can get you a copy of that so you understand the level of disclosure that we have to do at NYCHA.
I wasn't asking, I shouldn't ask for all the detail, merely that you have a process and a procedure. You answered my question satisfactorily. Thank you.
Okay, thank you.
Any other questions on the representation letter?
Jill, this is Jim. Just a question for you. Is this the latest version of all the track changes, or is there something after that that the audit committee has not seen?
Yes, thanks, Jeff. I was just about to get to that. Yesterday, I believe Anil had circulated an additional track changes version of the representation letter, only provided to the members in electronic format. And we wanted to share this with you because these were additional changes made subsequent to the first version you received. And the reason these changes came about is really due to the fact that management vetted this representation letter with, in my opinion, the appropriate parties, which included the accounting finance group, the legal group, the compliance group, the information technology group. And as a result of that thorough vetting process, additional changes were made to the letter, which were tracked for ease of review. The material changes really relate to language changes, I would say. Some of the representation were worded in a way that were absolute. And so some language was added to really fence it to only relating to material matters. Or to the best of management's knowledge. So essentially updating the absolute language to either material matters or to the best of management's knowledge. In addition, HUD agreement language was added in a number of instances, specifically related to the lead paint topic and to their efforts related to lead paint. I'm not certain if you've had a chance to review those additional edits, but I'll be happy to answer any questions related to those as well. And with that, that concludes Deloitte's presentation related to our audit procedures. So I'll turn it back to Tricia at this time.
My apologies. So there on the on our agenda, we have the consolidated CAFA for the authority, the LLC1, LLC2. Are there any, I guess at this point, finance, Jeff, will you be moving forward with this type part of the presentation?
Yes, we will.
Please proceed.
Hi, good morning, everyone. My name is Anika Lascott, and I'm the Executive Vice President and Chief Financial Officer for the Authority. Welcome to our committee members, Mr. Gonzalez, Mr. Kaplan, Mr. Koo. Over the last few months, the accounting team, led by our controller, Jeffrey Lovesnoy, have undertaken a pretty Herculean effort to deliver a financial product consistent with GAAP principles, which management stands firmly behind. During our time today, Jeff will walk you through the main drivers affecting the year-end 2019 financial statements and present the 3 key schedules for NYCHA, Public Housing Preservation 1 LLC, and 2 LLC. We've prepared a short supplemental document for this meeting, and those items will be shown on the screen so you can follow along with us. This year, 2 of the main drivers are the pollution remediation liability recorded pursuant to Gasby 49 and the real estate transactions for which we engaged an independent third party to take a look back of our historical accounting treatments. Joining us for, another few minutes are our Chief Compliance Officer, Daniel Green, Associate General Counsel, Sarah Cabacow, and Senior Environmental Planner, Dixer Abreu. These individuals can help to answer any questions regarding compliance with the HUD agreement or the legal obligations surrounding LeadBased Paint per Gasby 49. And joining us for the duration of the meeting, we have Thomas O'Hara and Frankie Chen from the New York City Actuary, should you have any questions on pensions and OPEB. So I will turn it over to Jeff, who at this point will take over and lead you through our statements. We look forward to answering all of your questions. Thank you.
Good morning, everyone. I'm looking forward to supporting the audit committee members this time and over the next several years into the future. Look forward to it. Louise, I had sent a summary file to you. That's great. So I thought it might be best, before we dive into the actual financial statements, to talk about some of those major drivers, because there's a lot that's recurring and routine over the years at NYCHA, and then there are a couple of specific items which I think are very noteworthy and need some discussion. And the biggest of which is our lead-based paint issue, covered under Gasby 49 pollution remediation. So we have a number of different laws and regulations which guide what we need to do as far as an operational corrective action plan. We've always had New York City Local Law 1, which requires landlords of certain ages, buildings, to take certain action to prevent harm to under 6-year-old children. And, more recently, we entered into an agreement with HUD and SDNY, and New York City for that matter, which, among many things, guided what we needed to do to remediate and abate our lead in our properties. There are the 6 pillars that were covered under the HUD agreement, but lead is the main focus of this because it's covered under Gasby 49, so we'll be talking about that. So under that agreement, we're required to not only do inspections, but, provide interim controls, which we'll call remediation. Remediation is typically painting, but could be other short-term steps to control the lead-based paint, and ultimately abatement. And under this agreement, there is a 20-year plan to complete all the processes that are required, and it's staged. The first 5 years, a couple of targeted developments need to be completely abated. Within 10 years, 50% of the developments need to be abated, 15 years, 75%, and by the time we get to 20 years, 100% of that. So it's a challenging plan. There's a lot to do. And from a finance perspective, our goal was really to get our arms around this and determine what the cost structure should be, how we can document it and get comfortable with it. So I think, as I mentioned, what really guides this process from an accounting perspective is Gasby 49. And if you can move that screen down a little bit, Louise, please. Louise, can you move that screen down a little bit? Maybe I can do it on my own screen.
Yes, it would have to be on your own screen.
I got it. Okay. Thank you. So Gasby 49, looks at when there's an obligating event where we need to record a pollution remediation obligation. And This, could be a number of different events, but it seems like for NYCHA, we qualify for all of them in 2019. We're compelled to take action because it's imminent danger to public health. I mean, that is clear at this point in time, especially for children under 6. We've commenced a remediation effort, and we've begun testing. In some cases, we've begun some remediation activities.
Excuse me, I'm sorry to interrupt, but are you still on page 1?
Yes, I'm still on, I think this is page 1, yes.
Okay, all right. Sorry.
I'm on the bullet that begins with as per Gasby 49, Victor.
Right. Got it.
All right, and in addition, we have been named by a regulator, at least one regulator in the form of HUD, and the agreement that I referred to earlier, the SDNY HUD Agreement. So we clearly qualify under the obligating events. And then the next item that needs to be considered is, are there costs that are reasonably estimable? All right, and that's a question which has to be evaluated very carefully. In 2018, when we evaluated this process, we determined that it was not reasonably estimable. We may have commenced some limited testing, but we had no real statistics and data in order to project whether the cost was 50 million or 50 billion. It could have been anything at that point in time, not reasonably estimable. However, we've gone through a significant process in getting our arms around the process this year. And first, I'll talk a little bit about, we have about 170,000 apartment units, but as Jill referred to, certain of those apartment units are exempt for previous abatement or previous inspections, or they were built after 1978 when the lead standards changed in paint. So there are only 134,000 target units that are out there requiring testing. And we've done significant testing. We've done a lot. In the most risky group, we've completed 75% of the testing. All right, and we've had about half of those apartment units with lead-based paint found in there. So we know it's significant. We've also tested in a less risky group, about 5% of that, and we found something substantially less in there. We've made an estimate based on the statistics we have that about 32% of our total apartments in the target group, 134,000 units, will have lead. Now that's an estimate, and estimates will change over time, particularly as we continue testing. Testing is fairly along the way. At the same point in time, we don't expect to complete that testing until close to the end of 2021. So with all of our estimates, they're subject to change, but the impact of this based on all of our analysis and all of our documentation is approximately $2.8 billion of costs, which will be divided in 2 different components, about $1.6 billion in remediation efforts, which are short-term interim controls, and $1.2 billion in permanent abatement exercises. Now, one thing to point out that's critical in this process is that Gasby 49 requires that we record all those costs in the year that we estimate it. So we've done so. And that appears in a statement of revenues and expenses as an expense. We're actually referring to as a special item, and I'll talk about that later. And we also have that as liabilities. But from an actual cash flow perspective, this will take place over a 20-year period. So, we don't have to incur these costs, and we won't incur these costs because the work streams are spread out over a 20-year period. In addition, Gasby 49 requires that we include not only external costs from contractors, for example, companies that perform XRF testing, companies that perform abatement, but also internal costs that are related to this process. And much of the internal cost for remediation and painting is done by our DMP group. So not all these costs are costs that are going to be paid outside of NYCHA. They're just costs that will be capitalized as part of this process. But 2.8 billion is what we have at this point. We feel comfortable with these numbers based on the estimates we have, but as I indicated, they are subject to change and they will be adjusted on an annual basis as necessary.
Hold on.
As we complete the work, they'll be reduced. If cost streams should go up, we may need to adjust it. And one last point about this subject is I go back to reasonably estimable because we're still applying that approach to the 2019 financial results. And there are some parts of the properties which we are not able to reasonably estimate at this point in time. And that would include the exterior of the buildings, the fencing, and the soil. There is an expectation that we do have some lead in those areas, but we just can't estimate the costs, and that may change within the next year or two. So with that said, I will just kind of close this and take some questions on the issue and also allow you to ask others in legal and compliance where we need to fill in some gaps here. The agreement, the HUD agreement, is very broad in nature. It doesn't just cover lead. I've only spoken about lead because that's covered under Gasby 49 and we need to record it. But the HUD agreement also covers the 6 pillars, including mold and pest and elevators, et cetera. And within that agreement, the City of New York has obligated itself to provide some financial support to NYCHA over a 10-year period for an amount of $2.2 billion. This amount was not defined specifically within the agreement as to how it would be spent. Instead, there was reference to action plans that needed to be created by management and approved by a monitor. And there's an expectation that some of these dollars will be allocated to lead, but probably not a significant amount of the $2.2 billion. So those amounts have not yet been finalized or approved. And as a result, we have not recognized any revenue in 2019, to partially offset the $2.8 billion of costs. But we can probably expect in 2020, once those action plans are finalized, to recognize a certain amount of revenues. So with that said, and before I move on to the next subject, I'm sure there are some questions.
Yes. Hi, Jeff. So with COVID-19 being the catalyst that has changed the way this agency has to operate and move forward and rethink the actions that they used to take with repairs, lead, and all of the above. There are developments now that are going through conversions, okay? And a lot of those conversions are time sensitive. So when we talk about dollars, when these conversions take place, then it'll be up to the new management people to come in and do whatever has to be done. In the interim, will the XRF testing and all the other procedures affect the timeline and the dollar value moving forward?
Dan, do you feel comfortable responding to this?
I can respond. This is Digzer from Real Estate Development. Hi, everyone. We have definitely already seen some delays in the project schedule due to COVID reentry. And, it's simply because we have to take, as you're mentioning, strict precaution before letting our partners go in and perform the needed ongoing evaluations that Jeffrey mentioned. So that includes COVID reentry plans and review of such plans. And so the answer to your first question in terms of scheduling is definitely yes. Have we seen a financial impact as of late? No, because again, we will ultimately be doing all of the abatement work at these converted properties. So the abatement work is as
I'm
part
sorry?
of the package conversion.
Okay. And so, again, the Southern District and all the agreements and all the other things that have happened that we now have to perform, you know, we also have to deal with HUD as part of this formula. So I guess what I'm trying to say is are we working in collaboration with not only our partners, but as well as with HUD, the monitor, the agreement, as to how this is going to move forward and avoid any further delays, even in spite of COVID, for these conversions to take place? And will we have the dollar amounts to take care of that before the conversion?
So, Mr. Gonzalez, I believe your question is sort of addressing who do we deal with in the RAD pact conversion process. And so HUD is a partner in that process. They have to approve all of the conversions and when items are delayed. And they also have to approve all of the financing for those conversions. So the way that the process works is that we go out with an RFP and we solicit for development partners to partner with us in helping to provide the financing and what's needed for the transactions. So that process is ongoing. To your point about delays, as Digser mentioned, certainly we have had to delay some of our lead related work, you know, because we may not have been able to go into apartments for some time. But, you know, Dan can probably speak to what our timeline is like, but we are anticipating that we would start resuming that work at some point soon.
Okay. And we have taken that into consideration when we're formulating this plan, or dollars, where we're mentioning the dollars that we're talking about in this particular lead-based paint pollution remediation.
Correct. So what's interesting about this number is that this is all in. So if an item is in our portfolio as of December 31, 2019, that abatement cost or remediation cost is already included in this. So it's an all-in number. So if the development moves out through RAD, you'll see a change, as Jeff was mentioning, as we refine estimates for the next year. But this kind of is a stop at a point in time. So if we still have the development, they are included in these numbers.
Okay. Okay. All right. Thank you.
No problem. Any other questions while we still have Dan and Sarah and Digser, particularly on HUD agreement compliance or the lead obligations? I know that they have other meetings that they have to get to. Mr. Kaplan, Mr. Koo, anything from you both?
And cut off. Oh
We can hear you
my.
now.
We can hear you now.
Oh, you can. Uh, when you have the numbers, are they adjusted for inflation? Is it, as I understand it, there's this, you have to do this process over a certain number of years and a certain number of dollars. When you calculated the dollars involved, forget the virus, what rate of inflation were you assuming?
No, the inflation rates, I'm sorry, I'm hearing myself echo. The inflation rates will be built into future years' calculations. So right now it's at current year dollars.
My guess is at the end, it'll be a bit much bigger number then, huh?
Well, the numbers will change for a variety of reasons. I mean, ultimately, the plan to actually convert different properties will cause these numbers to drop, probably at a much greater pace than the inflation will offset it.
Thank you.
I have a question. Can you hear me?
Yes, we can, Mr. Koo.
Okay, hi. I had a little audio problem earlier, so I wasn't able to get to you. Question.
What is that beeping sound?
Does the 2.8 billion include the, any liabilities?
I'm sorry, what is the definition of liabilities?
Being sued by lead paint,
No, it does not.
so that's just a remediation number and abatement number, but it does not include claims, legal claims in the
That's
future.
correct.
Is that being captured in some other area?
At this point in time, it has not been determined that there is anything that's probable and estimable to meet the standards of providing for a legal liability for this particular claim type.
Okay, the second point, and I'm jumping a little bit, but the letter that was being drafted to the members of the board, there's a statement in the 2.8 billion was recorded. And it's really just been estimated. Is that correct?
What?
I'm sorry, there's a lot of beeping here. We have estimated and reported the liability. So it sits within the financial statement, and it has been reported as both a cost and a reduction in our net position.
Okay. Okay. But it's an accrual. It's an accrual. It's not a
It's an
report.
accrual. You know, typically for other types of expenses, you wouldn't necessarily record this type of thing. But Gasby 49, the accounting requirements for pollution liabilities, you know, force us to have to record the full cost over time.
Okay, so there's going to be an asterisk on the financial statement for the net position, indicating that this is a one-shot requirement.
Well, there is lengthy footnotes. I think it's number 11 in the financial statements, which describe all aspects of the pollution remediation obligation and the impact on the financial statements.
Yeah. No, all I'm referring to is the overall financial statement, which presumably would show a footnote of some sort.
Well, you know, Louise, if I could ask you to scroll down a couple of pages.
Yes, which page would you like to go to?
Just go one at a time. I think we'll find it quickly. Keep on going. Okay, and then, so if we, and go to one more page. Okay, and if everyone kind of scrolls down to the bottom of this page, you'll see a special item in the 2019 column of 2,751,000, which is the main contributor to the loss before capital contributions beneath that 3,202,000. All right, and then we can see at the very bottom of the page, there is the change in net position and the net position beginning and end of year, and the impact is largely coming from this pollution remediation item. So you can see you're moving from a net position of 3.4 billion at the beginning of the year and to 1.1 billion at the end of the year, larger being caused by lead-based paint. And the notes go into a far amount of detail in order to describe the impact. Are there any other questions on the lead-based paint pollution remediation?
No.
Okay, thank you. Louise, can you move back up to the second page, please?
While we're doing that, I'll just say that Daniel, Sarah, and Digzer, if you need to leave, that's okay. Thank you very much for participating. It was great to have you joining us for this portion of the meeting.
Thank you so much.
Yeah, thank you.
So we also wanted to take this opportunity to talk about, another significant driver of our financial results, particularly in 2019. So from a real estate transaction perspective, a few things happened during the year. First, we closed on some conversions, the Hope Gardens Bushwick transaction, and we actually issued a promissory note for $71 million, which over time we will hope to collect. However, the loans are based on cash flows available to the developers and not based on a fixed schedule. So there's no guarantee when we will collect that or how much we will collect it. But we do follow the revenue recognition criteria based in the Gasby on that 71 million. So we haven't recognized any of it yet. And we'll begin to recognize it when cash is received, and we'll amortize it over an extended period of time, depending on the circumstances of the transaction. So I think I just wanted to note that we closed on that 1/2 transactions during the year. But I would say that the larger area that was focused on from a pure accounting perspective within 2019 was we took a fresh look at the historical accounting for real estate transactions. We believe that there was a lot of complexity involved and the structure wasn't as well documented as it could have been. So we wanted to get comfortable with it. And we had some, I guess, hunches from the beginning regarding what was right and what needed potential evaluation and adjustment. We also engaged BDO. I think that was referenced by Jill earlier. We engaged BDO to support us in this process. And we were able to confirm a number of things, which was very reassuring, that our treatment of capital assets for all the previous transactions, not just Hope Gardens and Bushwick, but transactions going back to, 5-6 years time, were accounted for properly. We were retaining these assets on the books for all lease transactions. Most of these transactions are set up as 99-year leases. So we are still retaining the assets on our books, even though technically we're taking the operating responsibility off our books and the legal responsibility off our books. We confirmed our revenue recognition practices, but we did have to kind of readjust how we were dealing with certain things. And one of these items is specifically noted in our notes as far as reclassification of notes receivable. In the prior year, we were maintaining $169 million of notes receivable within the current section of the balance sheet. But after further evaluation and looking at the specifics of the deals and the expectation of cash flows, we reclassified this to non-current assets. And as I described for Hope Gardens and Bushwick, the transactions are usually pretty similar in nature, whereas we issue a note and these notes are payable based on available cash flow to the developer. And typically speaking, the developer isn't going to have much to any excess cash flow in the early years. So that cash flow will be repaid over time out of their operating cash flows, out of a refinancing, et cetera. So we reclassed that to non-current assets, and you'll see that in the notes. In addition, we took a couple of large adjustments to our statement of revenues and expenses this year, both relating to a transaction which closed in 2016, the Ocean Bay transaction, and certain funding was provided by FEMA in order to correct and improve the properties, and these kind of flowed through NYCHA. We reevaluated what the legal and the accounting ramifications of the transactions were, and we determined adjustments were necessary. So on the first case, we had a loan which had an excess value of $100+ million, and we determined through the use of a third-party appraisal firm that the value of this note was closer to $20 million, based on the discounted cash flows and the available returns of funds from the borrower. So we had to adjust the value in 2019, reducing it by about $80 million. And that number appears on the statement of revenue and expenses. We'll see that in a couple of minutes within the loss on real estate transactions. Secondly, there was call it a sister transaction on a different parcel of land, also for Ocean Bay, where there was, at least based on the legal agreements, there was an investment in this entity to basically improve the land, to build proper drainage systems, to avoid flooding and other improvements of the land. And the incremental costs over time were about $89 million, which was largely funded through FEMA, but it did flow through NYCHA initially. And as we evaluated this in 2019, and we spoke to legal and others in the business area, we determined that these improvements did not increase market value, and we couldn't have a clear sense of recoverability in the future when these transactions turned back to NYCHA. As a result, we took an impairment on those assets of $89 million, and also reflected in the loss on real estate transactions. So, Louise, if you could just scroll down, I think 2 pages. One more, please. No, back up 1, please. Yes. And there is an area, and I don't know if everyone has to scroll to it or not, but in the non-operating revenue section, in 2019, you will see 146,483 loss, and that's mainly comprised of those 2 transactions that I just described. So as we went through the real estate transactions, we made adjustments as necessary based on revised estimates, and we also confirmed accounting practices, and more importantly, we set the roadmap for the future, because we'll be dealing with a lot more of these conversion activities, these RAD PAC transactions. So I think those were the major points for real estate transactions I wanted to bring to the committee's attention. Are there any questions? Okay. Louise, can you move back up 1 page, please? Yes, thank you. So I thought it may be best to just kind of gloss through the key points in here, not necessarily go through every line item, and talk about what's big, what's changed dramatically from year to year. I think on the cash and the investment side, I don't know that we have a lot of change from year to year, except kind of rebalancing in the investment portfolio between the current and non-current. So there's not a lot to talk about. I mean, Teresa, would you add anything relating to key points for cash and investments?
No, I really wouldn't. We really maintain stable levels of like with our self-insurance portfolio, and overall cash has been overall pretty stable, and our investments as well. If you were to look at the investment portfolio, balances were almost identical year over year. For 2019, we had a combined unrestricted and restricted investment balance of 557, and I don't have the number. It was just let's see. Yeah, it was about 564. So it's just relatively stable, but yeah, no real changes to highlight to everybody.
Okay,
Nothing
thank you, Teresa.
significant.
Thank you. So as far as accounts receivable is concerned, there are a couple of factors in here. Our FEMA receivables are up by about 120 or 130 million dollars. Much of it due to the resand, the Sandy program. It takes a long time to collect money from FEMA, unfortunately. There's also one item there which is a little noteworthy. We had about $90 million of receivables from the city and CBDG at the end of 2018, sitting in the accounts receivable section, which were expectations we would collect within 1 year some reimbursement from those parties for XRF testing. And it's taken some time to get monies on that. And we've taken a fresh look at it, and we've basically reclassified remaining dollars down into subsidies receivable, which is in the non-current assets. The 85 million is the bulk of the 90 million that was accrued for last year. So those are the major changes in the current assets section. You know, we continue to add assets to construction in progress and capital assets, just continued improvement to our properties where we've had funding. Much of that has been from FEMA, some of that has been from the city. When we go down to the notes receivable section in the non-current assets, we'll see some drop-offs there. I mean, I think there are some offsetting events there, but one of those drivers is the particular loan I talked about earlier in the real estate transactions, where we actually needed to reduce the value of the loan by about $80 million. So that explains much of this difference here. Can I ask our friends from New York City Actuary to comment on the deferred amount on OPEB? Tom O'Hara, would you mind speaking about that for a second?
Sure, no problem. This is Tom O'Hara from the Office of the Actuary. So the large increase in the deferred amount on OPEB, so that's under the deferred outflows of resources, increased from roughly 67 million to 396 million, was largely due to an increase in medical per capita costs above what we were expecting. There was some savings on, I believe, on assumption changes regarding, I think, trend, but in addition, we also had an increase due to the drop in the discount rate. So really those two pieces combined to account for most of that deferred amount, that increase. And this won't always tie in exactly to the increase in liability, because the deferred amount includes some pieces from prior years that while they get recognized right away in liability, they get recognized over a period of years in expense per Gasby regulations. So that's really what's driving the OPEB. It's the increase in per capita costs and the drop in the discount rate. So any questions on that?
No.
On this later. Okay, moving down, there's nothing particularly unusual in the current liabilities. Most of these are timing issues, not necessarily additional costs, but just when we pay and when we accrue for things at year end. I think some of the bigger highlights really go down into the pollution remediation obligation section. And we can see that we have $266 million of current liabilities for pollution remediation obligations. That's the portion that we expect to incur in 2020 out of the $2.8 billion. It's a fraction of the total. We scroll down to the non-current liabilities. We can see the bulk of the balances, the $2,622,413, sitting in the non-current, and that will take place over time. Another big item in here, and I'll ask Tom to step in again to talk about the OPEB liability.
Sure. So it's really the same as the deferred. The only difference is there's no, so whereas the, I guess, deferred outflows and inflows includes changes from prior years that have not been fully recognized in expense, the liability number here, so that $2.816 billion that we see in the 2019 column, that is just the changes for 19. So it's really a combination of things. It is, again, the increase in per capitas, and then with some offsetting gains from the change we made to the trend rate. But then there was also the decrease in the discount rate, which bumped that up. So that's really why we're seeing the increase from the 2.6 billion the year before to the 2.8 billion this year. It's really just all per capitas and the drop in the discount rate. There were some offsetting factors, but for the most part, they didn't, I guess the losses outweighed the gains. In addition, we did see a small gain to the repeal of the Cadillac tax that occurred in December of 2019, but it just wasn't a very big ticket item. So it was really just, again, kind of the same message, just higher than expected per capitas. I think we saw low to mid double-digit increases in the per capita on the pre-Medicare side, whereas we expect about a 7% increase. In addition, we saw that roughly, I think, a nearly 40 basis point decrease in the discount rate. So those were really the two primary drivers.
Any questions for Tom? All right, thank you, Louise. Can you move the page, please? Okay, so I think we've discussed some of the major ticket items on the statement of revenues and expenses in terms of the lead-based paint and the real estate transactions. We'll try to fill in a couple of the gaps here. Tenant revenue is slightly down. You know, we did close some RAD deals in 2019, and that's obviously going to have an impact on tenant net revenue. Collections were probably a little down too, by a few $1 million. On the other income, this bump up is largely due to developer fees that we recognized in 2019, most which were accrued and actually received in 2020. A good portion of that, maybe around $25 to $30 million, came in from the Ocean Bay transaction for developer fees that we earned. So we are getting some money back on those transactions. The rent for lease dwelling, this is basically just, you know, Section 8 and the cost it takes to fund the rent transactions. But we'll also find that despite the increase there in our subsidies and grants, we have a similar corresponding increase. I think it's probably about a $45 million increase included in subsidies and grants for the HAP funding through HUD. On the general administrative expenses, part of that's due to, I guess, what they call IBNR, claims expense, maybe about $25 million. And we also have some additional expense for external contracts, IT contracts, and there were some staffing increases in 2019, which also caused a expense increase in salaries. Maintenance and operations on the surface looks like there's been no change, but there have been a couple of very large offsetting items in there. For example, in 2018, we included the accrual for the XRF testing within maintenance and operations. That was about $92 million. So if we didn't have the $92 million in 2018, we'd have about a $92 million increase in 2019 expenses. And that increase would be attributed to a number of things. There was a lot of focus on trying to improve the properties during the year. I think $26 million of increase in heating and boiler contracts, $20 million of increased labor for maintenance and operations. We had about $37 million of ordinary maintenance contract increases, which included mold remediation of $15 million and $8 million for what we call asset retirement obligations for underground fuel tanks. So there were a lot of individual items which contributed to this increase, but I think there was a tremendous amount of focus in trying to improve the properties and not have to deal with all kind of heating and hot water problems that might have occurred in the previous year. So I think subsidies and grants, you know, the major drivers in here are an increase in the HAP program and also an increase in the HUD operating subsidy, which was about $65 million. So together, those increased by about $110 million and is the majority of this subsidy increase. The insurance recoveries in 2018 related to Sandy. We didn't have any such recoveries in 2019. We've spoken about the loss on the real estate transactions in 2019. And then we get down to the special item, which we talked about. Special items, you know, just from an accounting perspective, are kind of a defined term. It needs to meet certain standards under the Gasbys. Those standards include that it be infrequent, and clearly in this case, it is infrequent. This is the first time in our 90-year existence, I don't recall exactly how many years it is, that we've entered into a massive, you know, pollution remediation effort. And secondly, it needs to be under management control to resolve the issue, which it is. So we were properly classifying this as a special item, which at least you know, keeps it separate from the other operations and makes it a little bit easier to understand the financial statements. And in future years, as we increase or decrease these amounts, they will also be included in special items. So with that said, are there any questions on either the statement of net position or the statement of revenues and expenses? Okay. Then Louise, if you could move a few pages forward, please. I think it's 3 pages forward. All right, and
Come on, Kaplan. Let me try. With its impact on city revenues
is tremendous.
to do with this going forward.
Are those two questions, Mark? Are you asking first what the impact of COVID is? And then secondly, what do we expect to happen on city revenues because of COVID? Okay. Well, I think I'll address the first question first. You know, we are estimating about $100 million of incremental costs relating to COVID, you know, which include things like building sanitizing, fencing around playgrounds to keep people out, air conditioner systems, and, you know, excess additional staffing costs in order to address these type of issues relating to COVID. We've also estimated somewhere in the neighborhood of $60+ million for rent reduction due to dire economic conditions that are affecting our tenants and their inability to not pay rent or not pay rent on time. So we're monitoring those items and we will adjust those accordingly. But in addition, that's all on our public housing areas. We also are expecting that we might incur up to $37 million of cost for our Section 8 housing. So all of those things are kind of costs that we will incur, but separately, we're estimating funding to cover much of those costs. So first, we expect about $150 million of costs coming under the CARES Act, and we've already started to draw down on such funds. We need to present evidence of what we've incurred, and these costs that could be covered are greater than just costs relating to COVID, but they can also include certain operating costs that we've incurred, such as water utilities, electric utilities, et cetera. So we've already started to draw down on that, and we expect by the end of the year that we'll draw down $150 million. We expect also under the CARES Act that we'll be able to draw down up to $37 million to fund our Section 8 costs. And lastly, we have been working very closely with FEMA. And, while nothing is actually finite at this point in time, we're expecting $18 million at a minimum to be collected under FEMA to cover certain of our costs. And that amount could increase over time depending on the facts and the circumstances. So,
Thank you.
And Mr. Kaplan, just to supplement response, we have COVID recorded as a subsequent event in our footnotes. So if you look at footnote 28 in the CAFR, you'll see, much of what Jeff has just described in writing.
Something's terrible gone wrong with me. I'm going to get out of this and go on my cell phone.
Louise or IT, I don't know if you guys can help Mr. Kaplan. From my screen, it looks like he's signed in on 2 devices, and that might be the source of the echo.
That is correct. We're trying to control the feedback, but it's very difficult.
Thank you.
The devices.
Mr. Kaplan, you can speak now.
Yes.
Okay, well, God knows what's going on. Okay, thank you.
Yeah, we can hear you much better at this time.
And I can't see you, but that's all right. Go ahead.
Okay, so we'll continue. Before we leave NYCHA, are there any other questions relating to NYCHA, because we're about to move on to Public Housing Preservation 1? Okay. So first, let me make a general statement that the lead paint pollution remediation obligation actually funnels through all the entities we see here. So the $2.8 billion that we discussed previously, covered not just NYCHA proper, but also LLC 1 and LLC 2. And those amounts were estimated and distributed based on our testing results to date and based on the number of units that exist in each of the entities. So, just to start off there and show the big picture, if you can just scroll down on this page, and I'm having a little trouble scrolling for some reason, okay. Scroll down on this page to the liabilities. You'll see in the current liabilities, there's about $20 million of pollution remediation obligations. In the non-current liabilities is about 224. So in total, maybe 244 million or so. Maybe close to 10% of the total that's out there. And when we go to LLC 2, we'll also see an amount for PROs probably closer to the $95 million range, but still significant for that entity. With that said, you know, there's been some up and down movement in the balance sheets from year to year. I'm not sure that it really tells us very much. It's more just timing issues. I don't think there's a lot of stories here. You know, in the construction in progress, we've had some money that was received by city capital, and ultimately to improve certain projects, certain developments in LLC1, and they were treated as capital contributions to LLC1 during the year. It's probably about half of the increase of the construction in progress. But otherwise, when we look down here, really the only story to tell is on the pollution remediation obligation. We can see in the notes and loans payable to NYCHA, which is in the non-current liabilities, there's been an increase there, and there will continue to be increases from year to year because these particular loans have a term of thinking about 30 years or so, and there is no fixed repayment on this until maturity date. So there'll be interest that's accrued on this on a regular basis, which will increase the balance. But we don't necessarily expect a lot of repayments on that for the near term. Louise, can you move down to the next page, please? Okay, so tenant revenue is pretty similar to last year. Maintenance and operations are up. Some of this is due to asset retirement obligations, which we've revised our estimates in 2019 for removal of underground fuel tanks. And that's a requirement under the Gasby that we estimate the future cost of doing that, even though we have no immediate expectation to remove them at this point in time. So it's kind of similar to Gasby 49 and the pollution remediation, where you need to estimate the cost of executing a certain task in the future. And we also have about $1 million increase in mold remediation and maintenance operations. Utilities are kind of down across the board in all of our entities. I mean, pricing has moved a little bit. Usage has probably moved a little bit downwards. There have been some price adjustments by the utility companies for previous bills that were made, but nothing particularly noteworthy there. And give me a second as I try to navigate and scroll down. So we see our special item of 242 million. As in NYCHA, this relates entirely to lead-based paint. And likewise, we see our net position end of year being reduced by an amount that's pretty similar to the special item. So if we can move on to the next page, Louise, which is LLC2, actually a couple of pages, please. Keep on going. One more. Thank you. Okay, and we're on to LLC2. Same stories here relating to pollution remediation. I think there's not a lot of change in most of these balances from year to year. We could see the non-current liability of 88 million for pollution remediation. And we can see the current liabilities of pollution remediation of 7 million, so about 96 million in total. And that has a major impact on our net position. Louise, can you drop one more page, please? The tenant revenue on a percentage basis is significantly down, and this is largely due to PAC transactions that closed near the end of 2018, the Baychester Murphy transactions. So we had some significant revenue in 2018, but that was gone by the time we got to 2019. And then from the expense perspective, much of these expenses are also down because of Baychester and Murphy coming off the books in 2019. So kind of a common story there. And they have a special item here. You can scroll down. Louise, is this screen locked for some? Okay, I'm having problems scrolling. So we could see the special item of $95 million in 2019. And the change in net position is largely the same number because much of the other activity was kind of net zero activities. So with that said, that is the formal presentation for the CAFRA financial statements. There is another package which has been distributed to you, and Louise can make available to you on the screen if you'd like, which includes the full set of financial statements with the MD&A, the actual notes, which are very extensive, particularly in NYCHA. But I didn't really think we had time or the energy to go through all those pages, so we talked about going through a summary level, but we're happy to entertain any questions at this point in time. Okay, well, thank you very much. As I said, I look forward to working with all of you in the future.
Thank
Same
you.
here.
So there's one other item, which is a transmittal letter. I believe is that Deloitte is presenting that final item.
No, I think that would probably be Anika who would talk to that.
Sure, happy to do so. So the final item as attached is the transmittal letter. Just pulling it up. Give me 1 second here.
And Louise, can you go back to the transmittal letter, which was a separate file that was provided to you?
Yes, we'll do it. 1 second,
I mean,
please.
I think it also happens to be at the last 6 pages of the full document that you had up on the screen initially.
Correct. So I can begin to at least just talk through it. So as is customary, management has provided a transmittal letter to accompany the comprehensive annual financial report for year ending 2019. So in that letter, we confirm that the financial statements are presented in conformity with GAAP principles and with all auditing standards, contained in the government auditing standards, and that we have engaged an independent certified public accountant, Deloitte, to be our external audit partner. So in this sort of transmittal letter, we just include a short profile of the authority, pretty stock language regarding NYCHA and our current state. But given some of the key drivers in the financial statement, we decided to also include this year a section on HUD Agreement and pollution remediation, in addition to financial results and the various factors affecting our financial condition. A new addition this year is also a statement regarding the blueprint for change, which NYCHA Chair and CEO Greg Russ presented back in July 2020. So it is far more streamlined than has been in the past, and we really chose to focus on the items that are, consistent with the drivers in the financial statements. The letter is, signed off by me, and I'm happy to take any questions regarding the content. It should be standard, should all be things that you have seen or heard of before, but if you have any comments, happy to address those.
Is that the letter? You're speaking of the letter that's in front of us now?
Yes, that's correct.
Okay.
It's 7 pages total.
And that letter is part of the package.
That's correct.
Okay. So it looks familiar.
Yeah, it should be. The first 2 pages should be things that you have seen before. What really started to change is the content, beginning
Right.
on page 3, just to give you a better sense of where NYCHA is today, what our, HUD agreement obligations are, what our current financial 5-year plan looks like, and, the blueprint for change and those other sort of items. So it's very much a discussion of where the authority is today in relation to the financials.
I don't have questions.
And if any arise, of course, please feel free to reach out. We're happy to, discuss and provide anything in writing that you might need if you have questions. Mr. Kaplan, Mr. Koo, any questions?
Hello?
I think we might have lost Mr. Koo. I don't see him on the list anymore. I suspect we might need all 3 for the last item.
He's actually still there, but I'm not sure if he's connected, and we do need all 3 members on to for the approval and moving forward when it comes to the financial statement. So, Louise, at this particular time, can you try to contact Mr. Koo to ensure that he has access?
Will do. I'll try to have someone contact them right away.
Mr. Kaplan, are you still on? Just want to confirm. It appears that he may have also been dropped as well. So Louise, if you can also contact Mr. Kaplan.
Yes, we're reaching out to both. They do appear to still remain connected. However, they're not responding. Not understanding why.
Because we do need a quorum to address the final action items for the meeting.
Richard, we need you on the call to complete the audit committee, and Mark as well. See if you can reconnect. I'm gonna call Mark now. I just tried calling Richard Koo, and it went to voicemail, but I left him a message to sign back on if he's still not on.
Thank you.
Thank you.
So we're still within the meeting time that was allocated. So if we can just give these 2 members an additional 5 to 10 minutes to log back in, it will definitely assist in moving forward. If not, we will probably have to come up with an alternative plan. Let's just kind of hold off until we can get them back, and then we won't have to go to the alternative to move forward.
We are trying to reach Mr. Koo as well as Mr. Kaplan to provide assistance.
Mark, this is Victor Gonzalez. We need you and Mr. Koo back on so that we can conclude the audit committee meeting. Thank you. I've tried reaching both of them, and all I get is voicemail.
Louise, have you gotten any connections to these two members?
No, we have not. We have not been able to successfully contact both Mr. Richard as well as Mr. Kaplan. We are trying again. We keep calling.
Okay, we're still within the time frame, so let's just see if we could give them another 5 minutes and we'll take the other alternative so that we could officially conclude the meeting, but yet still get documentation on moving forward with the financials.
We are going directly to voicemail on both Mr. Kaplan and Mr. Richard when we try to contact them.
Okay, so our second option would be.
Tricia,
yes.
just once, do we only have one number for each of them? Or do we have an alternate number that we can also try?
We gave the primary number that they would answer to.
Okay, because if they have another one, maybe we could check that. They may be trying to log on through that line.
The other one was from
Yeah.
their offices, and that, of course,
Okay.
at this particular time is not available.
Got it. Thank you.
Hi, this is Anil. I just sent Mr. Kuz another number to Louise.
Mm-hmm.
So he was having audio problems.
Let me take a look at your number. Okay. All right, let me have someone contact them. Okay, I'm going to have Mr. Koo being contacted on this new number now. We'll see. Do we have a different number for Mr. Kaplan?
I don't have it.
We cannot contact Mr. Kaplan. All the calls go directly to voicemail.
Are you able to connect to Mr. Koo?
We are trying to reach him right now as we speak.
Okay, it's a 212 number, right?
Yes.
Yeah.
Louise, Mr. Kaplan, do you have a 917 number?
For Mr. Kaplan, yes, we do. 698.
Got it.
So unfortunately, in this virtual environment, we can't control everything. In the absence of them at the particular moment, I would propose that we have our chair, which is Mr. Victor Gonzalez, at least move to make a motion to approve the financial statements, and with the possibility of emailing the other two audit committee members, as well as everyone else on this actual meeting, for someone else to motion to move forward. Because that's one of the most imperative aspects of the approval of this. So, Mr. Gonzalez, are you
Yes.
comfortable with that option based on this technical issue we're presently having?
I am, and I would also, once we do go through that part of it, I would like to be contacted when the other two members are actually reached, so that I know it's been done.
So what we will actually do is we will actually send an email, a formal email with all the attendees on it, to ensure that everyone is informed at the same time. Kind of stating what took place because of the technical difficulties, and that
Right.
you move the motion to approve the financial statements for the New York City Housing Authority, LLC 1 and LLC 2, to move forward. And then what we would do is get them to email back a motion and agreed.
Sounds like a plan. So let me then make the motion.
Please proceed with doing so.
Yes, I'm comfortable with it.
Okay, so Mr. Gonzalez, do you proceed with a motion to approve the 2019 New York City Housing Authority, as well as LLC 1 and LLC 2's financial statements going forward?
Yes, I do.
Okay, what we will do, preceding this, because of our technical difficulty, we will send an email to everyone at the attention of Mr. Richard Koo, our other member, as well as Mr. Kaplan, confirming that you have moved the motion and we need someone to second it so that this can move towards the board and towards issuance. Is that fair to everyone?
Everyone okay with that?
Yeah, yes, I think that works well. I mean, we're on somewhat of a timeline here because we have to deliver these statements to the board by September 30th and to the city by the next day, October 1st. So hopefully we can resolve this in the next day or so.
We will actually send out an email immediately. So once we conclude, we will put that email together to proceed going forward to ensure that we have that on record.
Thank you, Tricia.
You're
Thank
welcome.
you very much.
Thank you. I'm comfortable with that as well.
Well, we're living in a virtual world. We have to be able to adjust. So based on the situation, we will officially conclude this meeting, the Audit and Finance Committee meeting for September 17, 2020, with a follow-up email to conclude on the approval of those financials. We want to ask everybody, say this, thank you for participating, and we hope to see you at the next meeting, and hope everyone stays safe and well.
Yes, thank you. Jill, don't forget to also include me on that question from Mr. Kaplan about the rate, the discount rate, as to the 3 point. I'm sorry. No, not that.
So
Yeah,
Mr.
that's
Kaplan
the
is
rate.
back online.
Oh, okay.
Hello, Mr. Kaplan?
I meant the expected returns. Remember, he asked about the 5%.
Yes, the 5.2% on the expected rate of return, yes.
Okay. So, sorry, I don't want to, we could kind of follow up with this on email since Mr. Kaplan is back on. Mr. Kaplan, can you hear me? Can you speak?
It seems he's on mute.
Okay, can you unmute your phone, Mr. Kaplan?
He's not responding again.
Yeah, Mr. Kaplan, Mr. Kaplan, you're on?
Hello, Trisha,
Hello,
can you hear me?
Hello, can you hear me? This is Richard Koo.
Hey.
Great, thank you. So we were just gonna conclude and take option 2. So Mr. Koo, Mr. Gonzalez approved the financial and made a motion to move forward to approve to actually submit it going forward to the board as well as to all the other entities that we have to distribute. At
Okay.
this particular moment, we
Yeah.
would need another member,
Okay.
which would be yourself, to move that motion forward so
Okay,
that.
I second the motion to approve the financials for
Okay, great.
2019.
Thank you.
Okay.
So what we will do is, because we have 2 of the 3 members, which gives us somewhat of a quorum, we will email Mr. Kaplan on the decision moving forward and still
Okay.
get his confirmation so that we can have that on record for the entire authority.
Okay, good, good. I've had some real technical difficulties. I've had to listen via California for half the meeting because I could, I had to go into WebEx. Now, I have one substantive question though. The letter of transmittal. The letter of transmittal from NYCHA.
Yes.
Hello, can you hear me?
Yes, we can hear you.
Yeah.
Can I just interrupt quickly? I think I have Mark Kaplan on my line. He's now listening in through my cell phone. Mark, can you hear everyone?
Okay.
I can, but I
Oh, this is great. So, Mr. Kukin, if you just hold one moment.
Okay,
I just want to let you know, because of the technical difficulties,
Okay.
Mr. Gonzalez made a motion to approve the 2019 financials for the authority.
I heard that motion. I move a second.
Okay, so actually you'll be moving it third. So, Mr. Kaplan, this is very interesting. Thank you for all the participation. Mr. Gonzalez moved the motion, Mr. Koo seconded, and Mr. Kaplan has now officially moved in a third agreement to move forward with the authorities overall CAFA for the authority, as well as LLC 1 and LLC 2. So it will now be submitted on behalf of the authority to the board so that it can be approved and then move on to our other entities as well.
Okay, would you like, does anybody want my comments on the inconsistency in the use of the city name and things like that? I was ignored.
If you can send those because of the technical situation via email, please feel free to as soon as feasibly possible, because we do have, understand we have a tight deadline, and we will make sure that.
I tell you, my system's been working out well up here, obviously. I'll see what I can do.
Okay, no problem. We will definitely get in touch with you.
Just so you know, I've been listening to everything you're saying for all the while, and every time I get something, it says that your end has silence, so you couldn't hear me.
Okay, so I'm happy to hear that you were able to hear, so that this motion is effective. So
I heard everything.
Okay, great. That's great.
Okay.
So
can I ask the question? Okay. Tricia, can I ask a question?
Sure, Mr. Koo, go ahead.
Okay, this letter of transmittal that's being sent by the finance.
Yes.
It does not mention anywhere about the audit committee. There's no mention of either the audit committee approving the minutes or approving the financials or submitting this document on behalf of the audit committee. There's nothing there. Is that deliberate, or is that an oversight?
That's interesting. I can Jeff, do you know if it would be appropriate to include? I know that this was a letter of transmittal from, I guess it's from me to all members of the board. We could certainly add a sentence that says the audit committee has approved, if that's appropriate. We just didn't have that at the time.
So let me take a step.
I mean, last year I thought it was a transmittal from the audit committee to the board.
So let me give some history. Maybe this
not from the finance unit.
Right. So what actually
Right.
happened
So Tricia, if you could jump in, that would be helpful. I know that it wasn't in the prior transmittal letter either. So maybe there's history.
So let me give you the history. The history is that the audit committee Audit Finance Committee had actually requested that this transmittal go with it relative to what the financials look like. So it is an item that was requested to move forward to HUD, not necessarily to the board, but to bring light of it. So in fact, that last year we did it for the first time to see if HUD would accept it, they did. So making that addition, I think, relative to what has taken place today, probably would be acceptable, or to at least put a.
Tricia, I'm sorry. I'm having some real difficulty hearing.
Okay, so maybe if everyone could mute, then you would hear better.
Can I make a suggestion? Why don't we abandon this kind of call we have now?
Yeah.
It's easy to set up three-way conference call, a four-way conference call with Tricia, and the three of us in a real conference call. But we don't need all of the internet stuff, and then make sense of it. Because I'm having trouble hearing too.
Okay.
So I agree. So how about
Tricia?
Yes.
Tricia, you can't have all three of them on a call if it's not public. Okay, we have to comply with open meetings law. So there is no conference call to be had. I would just add, Mr. Koo, that in terms of what gets, this is Vilma, in terms of what is advised to the board in the resolution that the board votes on, that the audit committee recommended approval of the financials, it states that the audit committee met on X day, which would be today, and that they recommended approval of the financials.
Okay.
Okay, to address what you were saying.
And that's
certainly that does not, certainly we can also include it in the letter if that's the decision that's made by the audit committee and our finance folks. But just to reassure you that the audit committee is mentioned in the resolution that the board votes on.
Okay. Thank you.
Yep. Thank you, Vilma.
There's another thing I have. The letter of transmittal deals with one of my favorite subjects, which is the carrying value of the real estate. And I had understood some time ago in conversation with the audience and otherwise that the letter of transmittal referred to that, and it does. So I like that a lot, and I assume that someplace along the way that transmittal letter goes with the financial statement to the public. Does it?
Yes, it does. That's correct. And thank you for that comment. We knew that was important, and we wanted to make sure that was included this year for you.
I would think that you as management would like to say that, would somehow indicate, as Richard is saying, that the audit committee is pleased with the letter of transmittal because it does good things. I thought it was a very good letter. I don't care if you say it or not. I just thought it was I wanted to comment in the meeting that it was a very good letter.
Thank you. We really appreciate that. We worked very hard on it. And as Vilma mentioned, we're happy to sort of include a sentence, just reiterating what's already in the board resolution to say the audit committee, has met on X date and also approved these financials to go forward. So there is that. It could be a sentence. But of course, when it was written, we didn't have you guys approving yet. So.
Okay.
The other thing I'd like to suggest, I know there are all kinds of rules here about what can and cannot happen, Richard, but I don't think there's anything that prevents me from setting up a conference call with the two of you to just talk. Because this thing was somehow, I don't know about you, but I got getting cut off and all sorts of things. I don't know what the technology was. It must be my fault, although people on my end didn't think so. So, Richard, I think what I'm going to do is get you and me and Victor on the phone the next day or so.
Okay, all right. Okay, I'll talk to you.
Just for the record, I would caution on discussing any NYCHA business with more than two folks, because that would create a quorum issue.
Right.
I'm just cautioning on the record.
It's going to be a joke about this.
As long as you speak non-NYCHA related items, it's fine.
Right. Okay.
But any business related to the authority, there's a quorum issue because there's 3 members. 2 members will create a quorum.
Okay.
So in light of that, and we're the motions that were actually had, we would like to officially conclude the September 7th, 2020 Audit Finance Committee.
I move adjournment.
Thank you.
So moved.
Third.
Thank you. Thank you so much for participating and your fortitude to stay connected despite the circumstances. Have a great day, everyone.
You too. Hey,
Thank
Jill,
you.
how's